to tell you the story of how Stallion Capital Management came to be, because the way we run the Investor First Fund today is a direct result of everything we've learned getting here. It starts back in 2007. I had been in banking and then moved into the investment side at another lender. But I was unsatisfied because my job was really just to sell the investments my company handed me. I couldn't analyze them myself, and I couldn't shape something I truly believed was right for my clients. There was a true disconnect inside of me. The world of real estate, the world of lending, and the world of investing were all separate, and no one was connecting them. In 2005, I came across private lending, and it clicked. I saw a connection that most people were missing. You could use real estate as collateral, and you could turn real estate loans into investments. The property can protect the investor, and the loan produces the yield. I'm an entrepreneur at heart, and I wanted to build the best investment that I could. So in 2007, I went out on my own, determined to serve both sides of that equation. For investors, I wanted to provide strong downside protection and a high yield. For borrowers, the flexible financing they needed to build projects in the local real estate market. Now, I picked a rough time to start. 2007 was the very beginning of a great financial crisis. And about 6 months after we began, cracks started forming deeply in the real estate market. But here's what happened, and it taught me the lesson that everything else at Stallion is built upon. Even in a difficult environment, our model held. We had strong underwriting guidelines from day one, and that discipline carried us through a time when real estate was a negative term, and almost everyone was fleeing the asset class. While property values were falling and the broader stock market was crashing, our investors in real estate debt did reasonably well, and we preserved their capital. That was a revelation. By investing in the debt rather than owning the underlying real estate, you could be in a difficult real estate market and still come out ahead. At the same time, banks had stopped lending. That left a gap in the market, which we were able to fill. Borrowers could still get their projects off the ground, investors could still earn a strong yield, and everyone could do well, even in a hard market. We came out of that crisis having grown the company, and more importantly, having built deep trust with investors during the exact time that they were most worried about losing money. The broader real estate market finally turned around in 2012. As things normalized, we made an important move. We launched our first fund, the Stallion Texas Real Estate Fund. Up to that point, we'd used a fractional model where an investor put money into one asset at a time. The fund model changed that. Now, an investor could spread their capital across 20, 30, 50, or even 100 assets at once. That diversification created something powerful. It normalized returns and added a real layer of capital preservation because no single loan could dominate the portfolio. It allowed us to institutionalize our entire investment process. That was the second lesson. Diversification across many loans makes returns steadier and safer than betting on any one individual property. However, the real estate market keeps teaching you. The good times of 2022, when everything in real estate looked great, actually set up a lot of people for the difficult times that followed. And watching how different asset classes behaved through those cycles taught us the next lesson that shaped the fund you have an opportunity to invest into today. We learned that consistency is everything. Our investors want it, so do we. Steady performance over the long term beats a few great years followed by a few painful ones. And when we looked closely at which assets delivered the consistency, the answer was clear. We saw cracks in the commercial real estate market over time and in multifamily, especially after 2022. We also saw issues with land properties in 2020 and again in 2023 and 2024. However, residential real estate, 1 to 4 family homes, held up as the most consistent asset class of all. We also chose to operate in a market with genuinely strong fundamentals. Central Texas, and that would include Austin, Dallas, and San Antonio, is about as sound of a real estate market as it gets. So the lesson was crystallized. By concentrating on lending against 1 to 4 family residential properties in these specific markets, we could deliver great consistency of return and strong downside protection, because this type of real estate holds its value and stays marketable. So we brought all of it together, every lesson from every cycle, to create our new fund. the Stallion Investor First Fund. And the guiding idea is almost counterintuitive. We're seeking stability by doing less. And by doing less, I mean we're deliberately narrowing our focus. We lend in fewer asset classes, only residential 1 to 4 family properties. We operate in a more limited geographic area. And we concentrate on small, repeatable wins accumulated again and again rather than swinging for the fences. That focus is exactly what allows us to offer a flat, predictable 8.5% return. We have also dialed in on finding the very best borrowers in our market, the ones who consistently execute and build great projects, and our fund management and accounting processes are the strongest that they've ever been. That consistency is what allows us to fulfill the name of this fund, Investors First, because we believe in the steadiness of the model. We can pay you, the investor, first before anyone else. You receive your preferred return, and then only as a result of the consistent performance on the back end do we earn our fee. Investors have always come first at Stallion. With this fund, they truly get paid first. Having tried so many different types of real estate to lend against over nearly 20 years, I can tell you with confidence that we found exactly where we and our investors want to be. We're selective about where we deploy capital, lending only into markets that are resilient and fundamentally sound, on projects with consistent quality where there's both a real need for capital and a real opportunity to earn a steady return. What I love the most is being able to delight our investors by backing up exactly what we say we will do. I know we will deliver on this promise because it is built on consistent decisions and consistent performance. We're ready to grow, to build this new fund, and to exceed our investors' expectations. I invite you to join us as we continue the Stallion Capital legacy for another 20 years. If you have any questions about the Investor First Fund or Stallion Capital Management, you can learn more at stallioncap.com. Take care.